All right, let's talk about the stock market. I know, it sounds super complicated, right? But what if I told you that getting started is actually way easier than you think? We're going to break it all down into 5 simple steps that, seriously, anyone can follow.
So, does this sound familiar? You want to invest, but you have absolutely no idea where to even begin. Well, you are in exactly the right place. That feeling of being overwhelmed is totally normal, trust me. But stick with me, and by the end of this, you're going to have a super clear 5-step path to get you started on your investing journey with real confidence.
Okay, first things first. Before you can buy a single stock, you need a place to, well, do it. And that brings us right to step 1, opening your very first account. This is it. Think of this as your personal gateway to the entire world of investing. Now, you're going to hear this term brokerage account, and it might sound a little intimidating, but it's not. All it is the official name for the account where you'll buy and sell stocks. Just think of it like a special kind of bank account, but instead of just holding cash, it holds your shares in different companies. Simple as that. And getting one set up, it's so easy. It really boils down to just 2 simple actions. First, you pick a trusted, well-known platform. You know, one of the big names you've probably heard of. You can do it all right from your phone. Second, you just connect your regular bank account so you can transfer money over. And boom, that's it. Seriously, in less than 15 minutes, you can be all set up and ready to go. So your account is open. Now what? Let's get to step 2. This is where the fun really starts, figuring out what you actually want to invest in. And the key phrase here, and this is important, is to look before you leap. We're not gambling, we're making informed choices.
The easiest way to think about it is this. You're on the lookout for good signs. We'll call them green flags. And you're watching out for bad ones or red flags. So a green flag, that's a sign of a healthy business, maybe one that shows consistent growth year after year. A red flag? Oof, that could be a company that's just drowning in debt. Look, you don't need to become an expert overnight. Just start learning to spot the basic signs of a strong company versus a risky one.
Okay, now it's time to bust one of the biggest myths in investing. So many people think you need thousands and thousands of dollars just to get started. And that brings us to step 3, start small, grow smart. I'm telling you, you absolutely do not need a fortune to begin.
I mean, you could literally start with $100 or $50 or even $20. The actual number isn't really the point. The point is just to start, to get in the game. You just need to begin with whatever amount you're comfortable with, because the most important thing is simply taking that first step.
And this is why starting small is so strategic. You're not trying to get rich overnight. Nope. You're giving yourself the space to learn how the market actually feels, to get comfortable with the whole process, and to build good habits without taking on a ton of risk. You're basically learning as you go.
And you can see the power of that idea right here. That little bit you start with, plus adding small, consistent amounts over time, it really starts to build on itself. It snowballs. This isn't about one big, risky move. It's all about consistency.
Which leads us perfectly into step 4. And this one is less of an action and more of a mindset. And honestly, it might be the most important step of all. It's about thinking in decades, not days. In the world of investing, patience truly is your superpower. Listen, the market is going to go up and the market is going to go down. That is a guarantee. Trying to time those daily swings is just a recipe for stress and, let's be real, usually failure. True investing is about buying into good businesses and then giving them the time they need to grow. It's a long-term game.
Just take a look at this timeline. After 1 year, the growth is modest, it's okay, but then look at year 5. And then look at the huge jump to year 10, and then 20. That curve that gets steeper and steeper, that's the magic of compounding. It means your money earns money, and then that money starts earning its own money. It's a total snowball effect that only happens with time.
And that brings us to our final step. Once you're up and running, the new challenge is just staying on track. It's about learning to avoid the common traps that can derail even the smartest investors, so you can protect all the progress you've made. You know, most beginner mistakes really boil down to 2 things: emotional trading and chasing quick profits. And they're kind of 2 sides of the same coin, right? They're both driven by fear and greed instead of a calm, logical strategy.
Let's focus on the big one, emotional trading. This is when the market takes a dive, and that feeling of panic in your gut just screams at you to sell everything. Or it's the opposite. A stock is soaring, and that little voice of greed whispers for you to pour all your money in at the very top.
Both of those are just reactions, not decisions.
So what's the antidote? A plan. Your strategy, the one you created with a clear and rational mind. That's your guide. It's your playbook that you have to stick to when things get turbulent. Having that plan helps you ignore all the noise and just stay focused on your long-term goals.
I really want to leave you with this idea. It perfectly sums up everything we've been talking about. Don't worry about trying to jump in and out at the perfect moments. It's nearly impossible. The real key to success is simply being invested and letting time work for you.
So there you have it. The path is clear. Open that account, do a little research, start with an amount you're comfortable with, and commit to a long-term mindset. You just have to start smart, stay consistent, and let time do the heavy lifting for you. The journey starts now.